Welcome to Saugeen EDC, the local edge, where we're working in partnership for our community's future. I'm your host, Rose Austin. Join me as we talk with the people, partners, and businesses driving growth and innovation across our region. Hello, everyone, and welcome to the local edge. I'm your host, Rose Austin, and today we're going to do our episode 8, Cash Flow versus Profit and Why It Matters. And today my guest is Ramona Gallagher. Welcome, Ramona.
Thank you.
Ramona is the go-to guide for solopreneurs, small business owners, and bootstrappers who want straight talk, smart strategy, and zero fluff. There we go. As a business advisor, consultant, and unapologetic champion of common sense advice for uncommon entrepreneurs, she helps funders cut through the noise, simplify the hard stuff, and build businesses that actually work in the real world. Ramona blends street-level practicality with big-picture clarity, turning overwhelm into monumental and messy ideas into confident action. Whether you're building your business from scratch or expanding to meet customer demand, Ramona is the person you want in your corner. Ramona is the owner of Business Basics Canada. Thank you for joining me today,
Thanks,
Ramona.
Rose. I'm really looking forward to having our discussion.
Yes, so am I. Ramona has facilitated quite a few training workshops for us, some with our Advancing Women Economically program and also with our SUP program, our Summer Student Startup program. So we absolutely value her expertise. So to get started, Ramona, I'm going to ask you just a couple of questions just to set the stage, so to speak. And people often use cash flow and profit interchangeably. So what's the difference in simple terms?
So realistically, they are a little bit similar and people do view them as that. Cash flow from a perspective is just money. It shows the flow of money in and out of your business. It's based on timing. When is money coming in? When is it going out? To make sure that you have the ability to pay for what it is that you need, buy the supplies you need to get your due done, okay, to work on your business. Profit from a financial perspective is strictly what's left over after you take the money that you've got coming in minus all of the expenses. But profit tends to be more of a strategic dynamic that you look at what your profit is. One of the biggest misnomers for small business owners is that they're basing their profit or their profit margins based on what ChatGPT or some other dynamic has told them. And the problem with looking at, how successful your business is based on that dynamic is that you're comparing yourself to businesses that may be at different stages. And so I get this a lot with my, startup entrepreneurs, that they look at their business and they're going, oh my God, I'm so profitable compared to other people in this industry. Mm-hmm. And the reason is because you don't have the expenses that some of the larger businesses in that industry have. And so, when you're looking at your business and you're going like, on paper, I look absolutely amazing. But in real life, I'm struggling. And that's where the big difference between cash flow and profit comes in.
Right.
Profit tends to be a little bit more on paper. Cash flow is the reality of month end. Do I have enough to pay my bills? And the biggest one that we often forget is, do I have money left over to pay myself?
Right.
Because in a lot of cases, all of my entrepreneurs, they do Ramona, I'm just going to reinvest what I would pay myself in the business. And then they haven't actually captured what they should be charging for their products and services. Right. And that's the really big thing. And so cash flow becomes the barometer of your business. What do I need to be doing to increase the number of clients that I have, and how many clients do I need to increase this to? So that seems to be like, it's more of the action type item, whereas the profit tends to be the more paper financial type implementation of what it is that you're doing.
So basically what you're saying is it is possible for a business to be profitable on paper, but still run out of money.
Oh my goodness, yes. Because you have to look at the way we run our businesses and the models that we've set up for our own businesses. So in some cases, if you're a business who's doing work for a client and you give them 30, 60, or 90 days to pay you, you've done the work, you now have to wait 3 or 4 months to get paid for the work. Or if you run a business like a bakery where you're purchasing a large amount of inventory. So you've made a very, very big investment. And I always call inventory, I say inventory sits on a shelf and mocks you because it's money that's really gone nowhere until you can convert that into some type of an item that you can sell. And I really laugh about, about inventory concepts because, I get a lot of my early entrepreneurs going, Ramona, I'm going to buy in bulk because bulk is cheaper. So one of my clients, they were soap makers.
Okay.
And their supplier had convinced them that they were going to save so much money if they bought everything in bulk. So of course they bought 100 kilos of their main base item.
Mm-hmm.
And they ended up, they were doing their business out of their home. They ended up taking that box and having to put a tablecloth on it because they had so much stuff and didn't have the space for it, right? And so it's when you look at that, when is money actually coming in and going out? And what does that look like for you on a monthly basis? The other big thing that ends up happening for entrepreneurs is for some reason, they don't think that they are smart enough or acute enough to be able to look at their own numbers. Mm-hmm. And so they place the faith in someone else, a bookkeeper, an accountant, to be able to tell them whether they're making money. And so they can go a whole year without having any kind of an idea of what they're doing. And then it's like a surprise on, April 30th when they're, putting in their taxes if they're sole proprietors or when they're doing it for their corporation. And all of a sudden they're going like, oh my God, I didn't make any money. But they waited 12 months. Mm-hmm. And so this is the big thing. When we're talking about cash flow, talking about running a business, it's you are the decision maker. Mm-hmm. Your accountant, your bookkeeper will do the financial things. They'll keep you compliant, but they can't help you with the strategy or the decisions. Yes. And so one of the examples I always give is running a lemonade stand. Mm-hmm. If you know this month you're running your lemonade stand and you know that every day you're making fresh squeezed lemonade to sell the amount of lemonade that you can sell per day, and all of a sudden it's raining, and you find out at the end of the day that you only sold 50%. This is the time entrepreneurs need to be thinking, okay, rained once, 50%. Rained twice, 50%. It's the big, aha moment to say, maybe day 3, if it rains again, I should only be making 50%.
Right.
As opposed to wasting or not having it available to you. And so this is the part that sometimes as entrepreneurs, we end up getting so caught up in our do that we forget to look at our business from a holistic sense. Mm-hmm. That, we wait for someone else to do it, or it's the thing that we hate the most.
Yes. And
so we put it off. And yet it is the thing that drives the business. And so ways that you know that you're in trouble, if you have to start putting in your own money to pay a bill, and all of a sudden now you've not taken any money from the business, you've had to put more money in. If things aren't showing up the right way, or you're having to hold off making decisions that are going to, greatly impact your business, these are the aha moments you need to be looking at.
Right. Yeah. It's very important for entrepreneurs to be able to understand their financial statements. I mean, you can have a bookkeeper, as you say, or an accountant do your books for you. You can do them on a weekly, on a monthly basis. But if you don't understand what those financial statements are saying, you're going to get into problems like this, right?
Correct.
And it's so even if you have to sit down with that bookkeeper monthly and say, okay, what does this mean? And do you think I'm charging enough? Maybe I should be charging more for this product, or maybe I should be looking at outsourcing my inventory somewhere else. Or, maybe my expenses are too high.
Well,
you need to have those discussions.
You have to have those discussions. And I think people tend to overcomplicate it. Mm-hmm. They think it's more complicated than it actually is. When you look at what you do or how you do, or, if you were a maker, what is the process that it takes for you to make the item that you are selling? I had to laugh when I asked people how long it takes to make something. Ramona, it's 5 minutes. Everything's 5 minutes or 2 hours. And this started when I started dealing with artists. where I really noticed this. And I would sit with a room of artisans, and I always ask people, I go, what's your revenue goal? How much money do you want to make in your business? And it was always $100,000. And I didn't know why that was the number. And then I started asking them, I go, well, what do you sell? Or when I sell unique art pieces. And I'm going, okay, great. And I go, so how long does it take you to make each unique art piece? And they're going, well, it's, 2 months worth of work. And then I'm looking at them going, well, how much are you selling these for? And they're going, $1,000. And then I sat down with someone and I'm going, let's run some simple math here. 2 months to make it. In a year, you can only make 6 of them.
Right.
If it's 6 times $1,000 basic math, that's $6,000, not $100,000. We have a very, very big disconnect. On the other hand, I had a debt company who came in and they waited until year end and they're going, oh my God, our records show that we're $500,000 in a negative on paper, but our business is so successful. We have clients every weekend. We're always out there doing something, and their pricing, they knew every screw, every nail,
right.
every glue bit that they used, and the overtime that it would take, the number of people that needed to work on the job. What they forgot to include was all of the operating costs, the cost of doing the business part of the business. And so when you're not accounting for the people that are answering your telephones or the brick and mortar location that you have or insurance, all of those day-to-day costs, and you're not including them in your pricing, there's no way that you're going to be able to show a profit because you haven't priced properly and you haven't left yourself enough money to basically pay all the bills that you need to. And so it's really easy to fall into the trap, but it's really easy to understand if you put it in the context of what is it that you're doing? How does this impact my business? And what is the time that it takes me to actually do this?
Right.
And that's why cash flow becomes important, because it helps set our strategy into place, that we've made a decision that I am going to take out a Facebook ad or I'm going to sponsor a local softball team. We know that that check is due April 30th and that they need that money in order to get the uniforms. But if we haven't put it into our planning in the cash flow, we may not have that $300 available to us that we've promised a whole bunch of little kids waiting for brand new t-shirts, right? So this becomes very important in the planning process.
Yes, absolutely. I find a lot of people, particularly businesses that deal with accounts receivable, right? They'll do 30 or 60 days and sometimes even longer for good clients that they have a really great relationship with, or some of them it's 2 weeks, gotta pay it in 2 weeks, or there's a percentage added. Sometimes because they're not familiar with their financial statements, their cash flows, they forget that receivable is outstanding and it takes longer. So they and I think a lot of entrepreneurs as well, particularly in small communities, feel guilty calling that client and saying, hey, it's been 30 days. Do you think you could get a check to me? And that causes issues.
Well, it's funny because we worry about making the sale and asking someone to buy something, and then we feel even more guilty for asking them to pay us the money that we have.
Yes.
And then what ends up happening is that in a lot of cases when we can't pay our own bills, now we're behind on paying our bills, which then could end up with interest charges. It could end up putting us in situations where suppliers will no longer work with us. And it's that fine line to understanding what that looks like for your business. And I mean, the other thing now that a lot of people don't take into consideration in their cash flow is, where are they ordering the products and services from? And so it's great to tell me, and I get this all the time, oh, Ramona, it's so much cheaper to buy it from the States. When you look at adding the cost of the tariff, then there's duties, then there's shipping and taxes, and the insurance that goes with having it brokered now across. Before, we could buy $800 worth of goods US, bring it over here, no issue. Now, totally new rules, and we have to be able to look at that and diversify our supply sources, because if I get this all the time, oh, Ramon, I'm just going to add on the exchange rate. The exchange rate is only one small microcosm of what that item is going to cost you. And if you're shipping finished product over to clients, they're going to end up paying a lot more than what they even thought. And that's going to, like, sort of have an impact on your cash flow as well. And your profitability will make a really big difference.
Absolutely. Absolutely. So what happens when a business grows too quickly and they don't have enough cash reserves?
So this is the interesting thing. So people don't want to lend you money necessarily when you look like you need money. And so this is one of the planning things. If you're at the point where you can't pay your bills, you're not getting people paying you, it's really hard to look for traditional financing sources, because they're looking at your numbers going, you're not looking very healthy here. And so having that cash flow and knowing when it is that you're expecting funds, what it is that you're doing. So in a lot of cases when we're hit with these things, people go, or when I'm just going to sell more. Well, if you're selling more, that means you have to buy more of the supplies and, do more marketing. And so we have to look at, are we pricing things properly? Is pricing our issue? That, and I get this a lot because people won't do the math of pricing. They'll do the emotional part of pricing, where they'll go, oh, well, the local competitor's selling it for this, so I'm going to sell it cheaper. I say to people, I'm going to haunt you if you tell me you're going to sell it cheaper. It's because you haven't really taken into consideration all the things and the value that your product or service provides to someone. And so you really do need to go back in and look at, is my pricing realistic for what I am offering? And maybe that's one of the ways that you need to look at, increasing the amount of money that you're bringing in. This is the time then that you also have to make some really hard business decisions, that maybe you can't do the expansion in the way that you wanted. Maybe you're going to have to hold it back. Maybe you can't, introduce a new line of products. And it's really hard for entrepreneurs as well to give up something that isn't working. Because it's like it's their baby. It's like Ramona. It's like, I've always wanted to sell this product. This is really important to me, but I'm going, every sale is costing you money. You need to look at, you have to increase the price of it or you have to drop it. And that's the hard part, because we get into a pattern of, I want to do the same thing. And this is one of those scenarios where, doing the same thing over and over again is not going to yield a different result. It's going to continue going on. And so we have to have these points where we stop and reassess what we're doing and looking at, is this the right place for me to be with my business right now? And I did that with a chocolatier. He had one of his best-selling items. He goes 75% of his business was on selling this one item, and he was so proud of it. And then I said to him, I'm going, there's something wrong with this pricing. And when we actually looked at how long it took him to make the chocolate, he wasn't accounting for that amount of time. He had hired people to help him make the chocolate because it was so explosive, the number of sales. He hired extra people to help him. We actually broke it down to say, you've now hired staff, you've got, new boxes, all of the ingredients, everything else. Every sale that he was making, he was losing $2 on.
Oh, wow. Yeah.
Because he never accounted for how much time and how much inventory supplies were involved in making this item.
Yeah, that's a really good segue into, I find that a lot of entrepreneurs that come to me, it's very difficult to explain the purchase of inventory versus cost of goods sold.
Correct.
Right? So can you explain that in simple terms?
So when you look at inventory, if you're a reseller, generally you can think about inventory in that way. I buy something from someone else that's a finished product, I bring it in, and then I resell it. So I will buy it at a wholesale price, and then I will resell it at a retail price, right? That's the one that most people think about. But there's also the concept of, and a cost of goods, if you're using products to build or make other products, that sits there until it is actually sold. That's something where money is sitting on a shelf. Like, you've purchased all of these things, but you haven't converted them into something that is sellable yet. And so what generally we say, the minute that we sell something, we look at the cost of goods at that point in time.
Right.
But you may have made this item, depending on what it is, you may have made this item 3 months ago, a month ago. If it's food, maybe not so long ago, so you don't have those big gaps. But if you've made something, like if you're doing jewelry or clothing or anything like that, where you could have made this item 2 or 3 months ago, and that's when you paid for it and it's now sitting there until you sell it, that's when we look at inventory. It's sitting there, and until it is actually sold, that's when we apply the concept of cost of goods. But that's not when we spend our money, and that's why cash flow then becomes very, very important, because our sale doesn't necessarily happen at the same time that we are making something and investing money in it.
Absolutely.
And that difference can make a really big difference financially, into the pocketbook for a small business owner.
How dangerous is it to rely on a line of credit for everyday operations?
Oh my God, it can be extremely dangerous because you have to remember, I'm a really big believer in when you're running a business, you have to make sure that you're able to keep roof overhead, clothes on back, food on table. When I look at investing personal money or line of credit, you're kind of taking away from the family or from your personal security to fund the business. Now, if it's a short-term kind of thing, then that's, then you know that you're going to be able to recoup that money quite quickly. But what happens is, in a lot of cases, people keep dipping into that line of credit over and over, and there's not money going back into it. Mm-hmm. And that's the real problem, is that now all of a sudden, depending on your interest rates, depending on how quickly, depending on, in a lot of cases, our entrepreneurs, they're not getting these line of credits for the business.
Right.
These are personal family line of credits. And so these are things that would help pay for emergencies for the family. Now they're sort of funding the business. And it can become extremely problematic that, your family is suffering because of what it is that you're doing. The interest rates that you're paying become problematic because you haven't accounted. You just accounted for the dollar value. You haven't accounted for the interest that's accumulating for how long you've had that money out and that you haven't repaid it. And again, this can be make or break for a lot of our small entrepreneurs.
Yes. Yeah. I find a lot of business owners do this, and I'm sure you do as well. So why do some owners confuse money in the account with actual profit?
So, because money in the account, again, it's about timing, and that's what your cash flow will show you. Your cash flow will look absolutely amazing. 1 month you could have, $10,000 sitting in the bank account. But what happens is that $10,000 isn't money that is available to you. It's money that has to pay for things either in the next month or two, or it has to pay for your accounts payable, things that you still owe. And so this becomes a really hard thing for people, that they're kind of going, it's something that you need to make sure is there because you have committed it in a way. But on paper, if we were to look at an income statement at that point in time, we say at May 31st, what are my revenues? What are my expenses? And my profit is showing as being amazing. It's because it's sitting there and it has future use that you may have attached to it. And so people don't understand that on, May 31st, this might look absolutely beautiful. On June 30th, this may not look as good. It may look totally, totally different. And that's why sometimes when we look at the concept of profit and we're looking at it at a specific date and time, it can really change because it's not tied to the strategy of the business. Right. Like it's not tied to the day-to-day operations. Mm-hmm. It's tied to, where you are on that day and looking forward. And so that's why sometimes people don't recognize that. It's just the same as, someone going, oh, I have this money in my bank, I'm just going to pay myself the whole amount and take it out.
Right.
It's like if you haven't
have to put it back in.
Yeah, like that's exactly, if you haven't planned for it and you haven't put it, and you haven't assigned it, you really need to leave it there to help you manage the business and make sure that you've got the funds available to do what you want to do in your business.
Mm-hmm. Mm-hmm. I know you mentioned interest, but what other expenses tend to surprise entrepreneurs the most?
Oh, any type of bank charges, any type of duties, shipping, anything like that. I really get a lot of entrepreneurs that really haven't factored in what are all the elements that are required to make something. So things like packaging or, I give the example of my lemonade stand. right? They look at the lemons, the sugar, the water. They forget about the cups and the straws and the napkins that need to go with that purchase. And so those types of things aren't included in the price. And so when you're looking at pricing and costing, they may include it as a material and supplies, but then they forget that that's actually what the cost of that item is. And so things like that really have an impact on, what it is that you're doing for your business. The other thing are loan payments. Like, do you have a loan? Is there something, if you've purchased a large ticket item and you've taken a loan, there's the principal amount and the interest amount of the loan, or you're paying back a credit card. Or you have accounts payable, the Rogers bill, you get the month after to show what you've actually used. And people tend to forget, that those are expenses that are going to need to be paid and that you put money aside for it.
I know you mentioned when you have to start putting your own money back into the business, that can be a definite early warning sign that your business is heading into cash flow trouble. Are there others that people should look for?
Sure. If you're not able to make your bills, like if you can't pay your suppliers what it is that you're doing, and definitely if you can't pay employees. I mean, if you have employees and there's any type of a glitch, this becomes really important that you need to keep an eye on it. If you are not selling what it is, now you have to start looking at what are other strategies. All right. And so for those, if something's not selling, I try to, and this is a really big thing that a lot of entrepreneurs will do, is they will try to firehouse something. Okay. All of a sudden, everything's a 50% discount. Well, clients get to recognize the concept of, at the end of the month or the end of the evening, you're selling everything for 50% off. Right. And then they will wait for those moments. So you need to make sure that you're not discounting. I'm a really big believer you bundle something. Attach it to something else that's making money and then sell them both as a combo, right? Because now you're making the money, you're not giving something away.
Right, great idea.
So those are some of the, those are some of the big ones. And a lot of my entrepreneurs will do Ramona, I'm not going to factor in, paying myself. I'm just going to assume that I'm going to reinvest. And I'm kind of going, if you're doing that, you're running a charity. Okay, because I always ask my clients, I go, if you're not paying yourself, I go, how are you paying your own personal bills? Like, none of us have a money tree in the backyard. And so I'm going, if you're doing that and not even factoring in what you want to pay yourself, then your pricing of your product and service is totally off.
Right.
And then if, you end up hiring an employee, now you're compounded. You haven't paid yourself, and now you've got somebody else that you're trying to support because you haven't accounted for this properly, right? If you're having to ask for discounts, if you're having to waive payments, these are things that are the big red flags. And if you really can't see the direction, like I'm a really big believer, I make all of my clients make sure that they've assigned a dollar value to how much they're going to take out of the business. The other thing that they forget about are the taxes. So at a minimum, you have to look at least 25% of whatever your profit was as being, taxable. That's your taxable income. And so people will forget that. And that tends to make a really big difference when you've got, a substantial bill to Canada Revenue Agency. They don't forgive it.
That's right.
And so this is a really big thing that now you're just basically financing debt. And you're not doing anything in your business that's moving your business forward. You're dealing with the past things that won't allow you to go forward.
I have found a lot of entrepreneurs as well who are selling an item or a service that they're collecting HST on that service or that item. And that's going into their bank. What they're forgetting is that some of that HST, less your credits that you get for that, has to go to Canada Revenue Agency. So you have to account for that, as that money has to go back out, right? Yeah,
and a lot of people think it needs to be complicated. You can do this through a simple spreadsheet. You don't need to hire, a whole bunch. My first year entrepreneurs or startup entrepreneurs, they generally have less than 400 transactions. It's like, this is something you can do on a simple spreadsheet, something else so that you know what's going in, what's coming out, what do I owe, who have I paid, who needs to pay me. but they overcomplicate it in their head, and someone has told them it's way more difficult than it is. And to your point about HST, money you collect less the money you pay is the difference that the government either owes you back or you owe them. But people make it way, like, and then again, when you look at the input tax credits and
Yes.
the words that we use make it way more difficult than it actually is. And I think that's the biggest thing, is that entrepreneurs in their head are convinced that it's way more complicated, that they must be doing something wrong if the numbers are showing out that they're doing well, that they must have made a mistake. And it's like, no, it's very, very simple.
So how important would you say is forecasting and budgeting? And how often should it be reviewed, redone, looked at?
So rule of thumb is, realistically, from an operational perspective, for you as a business owner, see where you are, we recommend looking at it monthly. To look at it and see what happened if I thought that I was making $1,000 and I only made 500. What were the incidents that happened, so that I can have an understanding of, is that something that could happen in the future? Given my lemonade example where it rained, okay,
Yes.
and people didn't show up. If you don't do it and you don't look at why some of the reasons, and even if we look at your expenses, I thought I was going to buy branded merchandise right now. I couldn't do it. Now we go, well, should we be putting it to next month? Should we be looking at, I need to get it in for this season, or maybe I need to bypass this season and buy winter merchandise as opposed to summer. We have those discussions so that we as entrepreneurs can look at where we are in our business and look at what we need to move the business forward. And we need to look at what we've done in the past. In the beginning, you're slower at things. Your production, takes so much longer. And then when you get better, you sort of start increasing stuff. That money becomes extra money because I've allotted this to it. And it becomes really important for the person to know where they are and what are the changes that they might need to make in order to not keep repeating. Like I say, if I knew in June that 50% of my people weren't going to come if it rained, and I waited until, next May, I would have had a whole year, multiply
Yes.
that by the number of rain days that I would have been making produce, that a product that I would have been throwing out at the end of every day. But if I would have taken the couple of moments to look at it, logistically look at it from a strategy operations point of view, I would have made different decisions. And that's the key for entrepreneurs, is to be able to have those discussions. And you said, if you have a bookkeeper or you have someone else, we have things, small business enterprise centers, any one of those, the community futures office, any one of those organizations can help you review it if you're unsure and give you sort of the tips and tricks
Yes.
of what to be looking for.
Yeah. Don't be afraid to ask for help.
Correct.
Right? I mean, you go to these places, they're confidential, right? Everything you tell them, everything you show them is 100% confidential. And they're going to, as you say, give you the facts, tell you the way it is and what you should be looking at.
Yeah, and I think that's the biggest thing with entrepreneurs. We think we have to do everything ourselves.
Yes.
That we're an island. And
Yes.
you know what? Unless you build your community, your tribe, people who are going through the same thing, I really find when I'm dealing with entrepreneurs, they think that they're the only person that's ever been in this situation. And then I introduce them to other entrepreneurs who've been in the same boat. And it's like, oh my God, it's not just me. It's like, no, this is a common, join the club, wear the t-shirt, right? We've all been there. We've all done it. We've all learned from it. That is also that people feel like if something's going on, that they failed. And it's not a failure, it's a learning experience.
Absolutely.
It's like, I've learned something, I'm not going to do that again. I'm going to move forward doing this. That's the positive part of it. We always look at our financials as being negatives. There's always something wrong, but we need to flip the narrative and say, you know what, I learned something. I made a better decision
Yes.
to move the business forward.
Yes, absolutely. Do you think it's important, or should a small business even consider keeping an emergency reserve or a contingency fund?
They definitely should. So we generally say that if you're an entrepreneur, small business owner, you generally want to keep at least 3 months of what we call operating costs. These are the costs of running the business. We'll only focus on the cost of goods. What does it cost me to make what it is that I'm selling? When we look at the operating cost, that's the cost of doing the business or running the business end of what it is that you're doing. your insurance, your bank fees, your marketing, your advertising. You need to have at least 3 months in reserve is an average estimate. Now, depending on the size of the startup, if you're a home-based small business entrepreneur, generally that's about $5,000 a year, and it can go up to $15,000. If you have a brick and mortar, if you have employees, now we're looking at exponentially larger. But you want to at least have, some type of a backup of at least 3 months to know that if there are going to be some waves or arcs. It also depends on how you're running your business. Is it a side hustle that you have other guaranteed income? Is it a seasonal business that we have to make sure that we're, going to that seasonality, right? That, sometimes it's really, really busy and then it's, slow as dirt, right? And you've got to be able to manage that to make sure that you're still able to pay for the cost of the business, not the cost of the items that you are selling. And that's what a lot of people forget about.
Yes, they do. What tools or systems would you recommend that could help owners better manage their cash flow?
So I always say in the beginning, do work the way that you work best. If you're a pen and paper person, then using, there's all kinds of pen and paper type things that you can use in the beginning as you're building your business. Okay, there are a lot of free software that you can use that's available without having to hire a bookkeeper at that point. So that, if you only have a few transactions, and that's what I say, bookkeeping is simply the art of tracking, storing, and retrieving information. It is nothing more complicated than that. It's here's my invoice, this is what I bought with it, this is the category that I'm going to assign it to. And so in the beginning, you can use very, very simple low-cost systems. And then as your business grows and as an entrepreneur, you realize that your time would be better spent growing the business, making things, selling. Then you bring on people to be able to manage. You hire the bookkeeper, you bring on the accountant. When there's that tipping point where you're spending way too much time doing something that is not making you money.
That's right.
That's the tipping point.
You're working in the business versus on the business.
Correct.
Right? So
yeah, and there's that tipping point. And it's a very, very fine line that people are so focused on making or doing or providing that they forget that there's a whole end of business,
Right. What roles does financing play? Like, when is debt healthy versus when it's dangerous?
So I think it's healthy in the fact that whatever you are purchasing is going to help the business grow. I'm really big on productivity tools. When we talk about what is going to help your production in making what it is that you are making or providing the service, and then in helping you run the business, the productivity tools of the office, those types of investments can be really, really important for the business. But I run into, and it's really funny, I call some of my new entrepreneurs bass, the fish bass.
Okay.
And the reason I call them that is because bass, the fish, tends to chase after shiny things. And a lot of my entrepreneurs, when they start, for some reason, they believe that everything must be brand spanking new. I need a computer. It's not, I need a computer. I need an Apple iMac. And it's looking at what realistically do you need? What do you have available to you right now? What can you keep using until it dies? And then only buy when there is a value add to you spending that money becomes really important. And if it's going to help you in productivity, if it's going to make you look good, it's not necessarily something that's going to bring you in money.
Right.
And then we make those decisions based on when are we ensuring that we've got the money that we need to run the business. Then we make those. The other great thing is if you're buying larger capital items, which you do with financing, you're generally not looking at getting financing for things that are smaller items. You're looking for the $500 plus type items, plus. The advantages as well is that those don't become expenses in that year. You're able to write those off. So in this year, as opposed to saying that you spent $5,000, that one item is maybe $2,000 this year, $2,000 next year, $2,000 the year after, or $1,000. In the first year, if you're not making any money, to write off all of it is not to your advantage.
Right.
And so financing will help you. Now, it's the concept of lease or buy, right? How much money do you have available to you? How are you going to be able to service the debt that you've taken on? Do you have enough coming in to pay the principal and interest that might be there? And sometimes we look at, is it really a necessity item that's going to help us grow the business? And again, now we have places like Community Futures that do a lot of financing with small businesses. And, being able to have those reality check moments in, do you really need this? And what's it going to do for the business? And what is it going to cost you in the long run?
Right. Absolutely. Absolutely. So I'm assuming that you have seen businesses fail primarily because of cash flow issues rather than the lack of customers.
You've had a vision in your head for your business about what you're going to earn or what you're going to sell, and you haven't really thought about the numbers. So you've got people who are willing to buy, but they're paying a lot less than they should be paying. You're not charging them enough. And so now you have loads of demand, but not enough product or service to be able to service that demand, which is a problem. And then, we haven't thought about some of the everyday costs. For a lot of business owners, they love the flash. Yeah. They love the marketing. They love the being in front of people. And the other stuff is kind of, I call it the orange because orange is the color I hate most. So it's
my favorite color.
Yeah, and so it's really funny. Orange is my most. So the bookkeeping, the admin type stuff.
Yes.
We get so caught up in wanting to be in front of our customers and selling and promising and delivering that we forget about all of those other things. And it really is a time management kind of thing. How are you allotting the time in your business to make sure that you have time to work on your business versus the time in? And I think the other big thing with the cash flow is the concept of capacity, that we haven't done a real break-even analysis, of what we need to do. And I do what's called a sustainable break-even. I don't just do the basic break-even. I add in what I want to pay myself. What are all of my operating costs? What are my startup costs? What are the capital costs that are going to be in? And I have a really good idea of how many people I need to try to sell to or reach. Whereas for some reason, entrepreneurs, the minute you give them a business, they think they all have to meet like 1 million people or everybody in the world. And, when I actually break it down, you really only need to find 8 or 9 good clients. Find those 8 or 9, those are consistent, you're good. But they don't. And then so they're spending, tens of hundreds of dollars on marketing and things that aren't bringing in anything to them. And it's money out the door that has no value add to what it is that they're doing.
I find that a lot of entrepreneurs, whether they're startup or whether they've been around in business for a while and they're coming to see us, maybe they're diversifying, maybe they're growing. It's talking about any type of financial struggle is still very taboo. It's still something that they don't want to talk about. Maybe they feel guilty that they got into this position, they weren't paying attention, or maybe something, it could be something dramatic happened in their life that they had no control over, right? And it just put them in this situation.
Struggles are not failures.
No.
They're lessons or learnings about what you can do to sort of never get yourself in that situation again. And being able to talk to someone who has the ability to look at your business from a fresh perspective. They have the ability to know other businesses in your industry and to provide you with some insight as to, I get customers all the time. Even if I could provide them a better supplier, it's like, have you thought about doing this as opposed to what you're doing? Sometimes those discussions really do help a business owner, but like you said, we're afraid to do it because we have to admit that we might not know everything. And people feel really stagnant to that. But you have to look at those discussions as being, I need to be able to learn how to do this better. So I look at them as learning opportunities, not as admissions of failure. And a lot of people have, like you say, a difficulty doing that.
Yes.
But if we leave those discussions for too long, then we're not going to be able to get the support that we need, because having to take out a loan or anything like that, we've gone past that point of being able to.
Yes, and not only that, it's the emotional stress that waiting too long puts on you,
Oh,
right?
God,
It's
yes.
just, it's horrible. It puts it on you, it puts it on your family. And, asking for that help, when you first get that little glimmer that you may need some help, is when you should be asking.
And that's
exactly.
And then if you're following what you're doing on a monthly basis, and you thought you were going to sell 100 widgets and you only sold 50. First month you kind of go, okay, I need to make some changes. If it happens again in the second month, now we need to start looking at, these widgets are costing me way more than what I'm selling. Let's look at all of the possibilities and discuss it with someone. And there's so many mentorship opportunities and just discussion points. And I think the other thing that people need to understand is a lot of these services are free.
Yes.
They're always concerned that they have to find somebody that they've got to pay this exorbitant amount of money to. And there's so many resources that are out there that are free or really, really low cost to be able to participate in and have that discussion.
Yes. Yes. And being open to have those financial discussions with someone, even if you're belong to a BIA or a Chambers of Commerce, and that Bob down the street, has similar products to you. Maybe you want to go talk to Bob about his supply chains. Maybe there's something there. Maybe there's someone in his supply chains that you could get what you need.
And again, building your tribe is really important, because I've gotten 3 or 4 restaurants together to make, bulk purchasing. Because individually, they can't meet the minimums of someone. The better pricing requires a dollar minimum or a volume minimum. And if you can't meet that, if you find a group of people that may be able to do that together and offer that. And it's really funny because people think that their competitors are people that you need to kill and get out of the business. And sometimes the people that you're competing with can be the best source of information and inspiration and sharing, as opposed to someone that you need to try to avoid. And people don't necessarily recognize that as well.
Yeah, in the episode before, we were talking about working together collaboratively.
Yes.
That goes across all realms of business. You can learn so much from your peers, your colleagues, people that are in the same business as you.
And again, if as an entrepreneur, if you look at someone that's been in the business a year or two more than you have, even if it's a different business, but just those learned experiences of, and that's why I started my company. I started my company based on the fact, if I knew then what I know now, what would I do differently, or how would I explain this to people? And that was the aha moment. It's like, let's talk to people who have these experiences, who understand this, and maybe they can help me through. I don't necessarily have to share all my financials with
No, absolutely.
but the discussion becomes the relevant point of it.
Yes, absolutely. So, to summarize everything that we've talked about, what, in your opinion, is the biggest myth about profit and cash flow?
I think it's the fact that profit is the thing that's going to make or break you. It drives you. It's part of your strategy, but the cash flow is the thing that helps you run your business on a day-to-day basis. It's what keeps you where you are. It helps you grow. It keeps you from those midnight, oh my God, what am I going to do type of things. But profit will show where you are relative to other people in the industry. And so it's a benchmark. It's an aspirational mark, but cash flow will show you where you need to be right now and what you need to be focusing on.
So would you say that cash flow is the financial metric every business owner should understand?
They definitely should.
Yes.
And it's I don't know if you would call it a metric, but it's the roadmap. Okay. Cash flow will show you, your business is a journey. Cash flow will show you if you have the fuel to keep the journey going, and when you might need to stop at a gas station to refuel in order to continue that journey.
Right.
And so it sort of allows you to put your strategy into practice and look at where you are and what is impacting you where you are at this moment, and how is that going to impact you going forward.
Down the road, yeah. So what's one simple action business owners can take this week to improve their financial health?
This week, it's just sort of creating a budget. If nothing else, look at what it's costing you to produce the products or services that you're providing. Look at what the length of time is. Are you charging enough? and compare that to how much money you're bringing in, the revenue, what you're selling, and then looking at what your operating costs are, and just making sure that you can kind of map that out.
Right.
Because in a lot of cases, and this is great, we generally wait. It's the same as writing your goals for the year, or the New Year's resolutions that we break after, week 3. But this is creating a simple plan and making sure that you put it in your calendar. The minute you put it in your calendar and you say, I need to review what I'm doing on, every Monday, or, the first Monday of the month, making sure that it becomes part of your everyday, type of planning for your business, and that you set aside the proper time for it. That's one of the key things, because I find that people will set aside time for their production, they'll set aside time for their marketing, but they don't set aside time to look at the overall health of their business. And that, I call it CEO time, that at least once a month you need to have that CEO time booked in solid,
Right.
so that you do focus on that specifically.
Well, I hope every listener remembers everything that we've talked about from this episode. But is there one thing you'd like to leave the listeners with? One thing that they really should pay attention to?
I think it's the fact that they need to remember that it's not as overwhelming as they think it is. It's a very practical exercise, and you need to really know where you are in your business and where your business is and where you want it to go. So these things become every decision you make in your business has impacts, and you need to look at what those impacts are, as opposed to just making decisions. So if you're doing it, make sure you set aside the time to do it, and you give yourself a break.
Yes.
Cut yourself some slack, that if there's something that you don't know, that you ask, that when you're reviewing it, if you have a bookkeeper, if you have someone else, get someone else to look at it with a fresh set of eyes, because sometimes we get so caught up in what it is that we're doing that we can't see the forest for the trees.
Yes.
And that we wait. And the other thing is, with that is the fact that we generally procrastinate on the things that we don't like, or we put off the decisions that we don't want the answers to. And so again, planning and putting that in and setting aside the proper time to do it and review it with a clear head is probably the most important advice I can give people.
That's great. And I totally agree. Yes, that's great. Thank you so much, Ramona.
Thank you.
Thank you so much for traveling here today to be our guest. Ramona Gallagher is the owner of Business Basics Canada, and we are going to put her contact information up on this episode at the end of this episode. So if anyone is interested in getting in touch with Ramona to speak with her more on this subject or any other subject,
Yes.
she's got an expertise in all areas of business. So Thank you again for coming. We really appreciate it. Thanks for listening to The Local Edge, brought to you by Saugeen Economic Development Corporation, working in partnership for our community's future. Be sure to subscribe and stay tuned for more stories of collaboration, resilience, and success across our local communities.